Guys, this is Cory here at the Life Insurance Professionals. Going to do a quick video on how much life insurance do I really need, and we use something called the Human Economic Life Value, and we're going to just go through how we figure that out. It's real basic, and what to do and how to get it, and what my life insurance covers. Does it have living benefits? Does it not? But I wanted to just take this opportunity to kind of thank you guys for watching these videos. I mean, some of them have like 6,000 views on it, which I never really would have thought would ever happen. But I've been getting a lot of telephone calls from people. So if you are looking for life insurance and you just want somebody to give you some pricing or explain how it works, I'd be happy to do that. And you guys could reach me at my number, which will be below in the description, 561-542-8610, my direct cell. You got, no obligation. You get a quote, whatever. But I do appreciate all the calls I've been getting. That's for sure. It really helps out. And just to give you a little bit of my background, why I think I'm the guy for you. Of course, it's not about me, more about you. Is that I'm one of the few agents that unfortunately has received a death benefit. My wife passed when she was 37, shortly after giving birth to my youngest son, who's 8 years old. And, my oldest one is 14. Why I push living benefits on people. I really do push it on people. My wife was sick after my first son was born, actually stopped breathing on the table during the C-section. If she would have had a better policy, bottom line, we didn't know much then, 14 years ago, a living benefits policy, she would have been qualified under the cognitive impairment, and that living benefit would have kicked in. And I'll show you how much we would have gotten based off of the smaller policy we had. But that money would have, tremendous, been huge. It would have made a difference in our lives, to help her with doctors and dealing with the effects of a cognitive impairment. She just never really was 100% the same Glennie or same person that she was before. So let's just get going with this video. I don't want to take forever, but again, I am one of the few agents that you will find that has not only bought a policy when he wasn't an agent, but also received a death benefit. And several clients, love the idea that, I have that experience of being a widower, of knowing what people have to go through after they lose their loved one, and kind of sucks, but it is what it is. So let's share the screen here and get rid of this, which is me, big screen. So you'll see me looking around. I got 5 or 6 different screens around me. So we're just going to share this one. Hopefully you can see that now. How much life insurance do I need? I just made this little presentation to keep me on track here with showing you some slides and not having to go into the company site. So the little formula we use, let's see if we can get this bad boy to, what is my human economic life value? So what's the minimum human economic life value for a client? I take their retirement age. This is the minimum, retirement age minus the current age equals the years until retirement. What is my minimum human economic life value? Again, I'll stop reading that over and over again, but let's just take a single mom of 35 and say she's 5'2", 145 pounds. We take her retirement age of 65, we minus her current age of 35, means that there's going to be approximately 30 years left until she is ready to retire. Current income of 58,000. This is just a lady I did just recently. And she had those 30 years left. So literally her human economic life value, if her kids are going to have $58,000 for the next 30 years, if she was to pass tomorrow, then they'd be looking at trying to live on $58,000 a year every year. And some years are going to need more, some years you're going to need less. You're going to have to pay for college, maybe try to pay off a small portion of the mortgage or the bills or the debt. And if you have 1.74 million and you put You know, 15,000 per kid into a prepaid college fund. That's 30,000. Pay off $10,000 worth of college of a credit card debt. That puts you at 40,000. The funeral is going to run you a minimum probably of 12. I know I paid 14 years ago for hers, so that's going to be 45,000. So, you know, if we're going to take 50,000 or 60,000, if we're going to try to pay off some specific debts and say that maybe we spend 75 grand just getting rid of debt, you know, that means we're going to have less money. That means that 58,000 is no longer what they're going to have per year for the next 30 years. You know, so we need to set a budget for people to have the amount of money they're going to need. So how much will my human economic life value be? It's going to be the 1.74 million. And what's that going to cost per month? Well, let's see. The cost per month is going to be partially determined by your rate class, and I'll go through that. So what's rate class? Rate class is going to be your height and your weight, any medications you might be taking, which is basically the company mitigating their risk. And, you know, something else that's considered that people don't realize is credit, your ability to pay your bills. You have poor credit and you have excellent health, or you might have gone with what we call a preferred, you know, right here, highest is elite and down to the standard. And then there's some substandards. But if we would have normally been an elite or preferred, which is where we want to be, the top two, and we have terrible credit, they're going to use that against you in your rate classification. Most companies are using something called a Millman nowadays, a Millman report, and that's a credit report. That's a driving record report. That's going to also have your health report, medication report, your MIB, Medical Information Bureau report. And all that's going to get pushed into one big number or one lump sum. And they're going to give a number probably between like 1 and 10. And if you're below 6, you know, or below 8 or whatever, you're going to end up in one of these standards. So most of us want to be here, elite, preferred, select, or standard. But then there's going to be standard, substandard versions of that. So real quick, we needed 1,740,000. And what is her rate class? So we use a chart just to get started. I always quote somewhere between select and standard, just because I want to be the guy who under promises and over delivers. You know, it's easier to get an offer from the company at the end of this and say, okay, you know what? She went preferred, which I've had happen many times. Somebody who was a higher weight class that would have normally been in the standard had excellent credit, excellent driving history, excellent this, or that, and they ended up in elite or preferred. Never know. So this client and her husband, that's why there's two selected here. She was 5'2". What did we say she was in 145? So she ended up in that preferred rating right here, 5'2", between 137 and 148. So she got a preferred rating. The rate class for the female would be considered preferred. Well, what's going to be her monthly cost? That's the bottom line and why we're making the video. So we just throw in 35 that she's preferred non-tobacco. And again, that's another thing, tobacco. You have preferred tobacco and preferred non-tobacco. So what's the monthly rate? You're looking at a 20-year, which takes her a little bit short on the retirement time. You know, she's 35. So this is going to put her to 55. You know, who wants to be out looking for insurance at 55? Most people are going to go with the 30. Becomes a little bit more expensive, but 122 for $1.74 million. Okay. Pretty decent rate for a 35-year-old. And you know, they're locked in with almost $2 million there. If they wanted to bump up to 2 million, it wouldn't really make that much of a difference, but 20 years, 77, that means the term is 20 years. Just what's the difference here? This term basically saying that for a term of a period of next 20 years, there's no cash value development in here, but that's a huge aspect. I mean, for me, a guy who's raising 2 kids on his own for 8 years, devoted my life to those children. You know, I don't date, I don't do anything, but by making those decisions, it also kind of affects my lifestyle. and how much activity I get, and all that kind of stuff. So when we look at this, I wanted longer rates of longer term periods. There's no cash value growth in these. A lot of people don't see value in that, but I do. By the time I'm, in my 60s, I'll have spent hundreds of thousands of dollars on term insurance. Do I have permanent? I do. I have layered insurance strategies that I apply for me. But in that idea, oof, I mean, yeah, you 98% of these policies will never pay out, but that's great. That means I had a long, healthy life with my kids. I get to spend time with them. And I don't have to worry if something happens to me. I have a little phrase I've come up with, which is, you know, if your kids are going to have a great life with you, but they're going to have, just as good, if not a better life without you, if God forbid something happened to you. And that, I know, sounds weird, but we need to make sure, and that's how we do that, is we make sure that their life can be even better financially without us. Not that we don't want to be there, but if they don't have mom and dad, or they don't have dad, then they need to have an even better life than they would have. They need to have access to unlimited funds for amazing stuff that makes up for dad not being there. Nothing can make up for mom or dad not being. We all know that. It's not my point. My point is that we just want to make sure that they have the same access as other kids, because it might not be better, but it could be so much worse if you don't have, and you're a single parent, and it can just be so much worse if you can't afford not to be at work, and not, I mean, your kids have nobody, then they're raising themselves, or they're stuck with a 75-year-old grandmother who's vetching in the corner with a cigarette in her mouth. They're not all so like that mine was. So and when I lost my wife, I mean, that's who I dealt with, was my mom complaining, "You're dropping them off again with a cigarette in the mouth." And I mean, come on. It was not the best place for them to be, though. They loved her. So 20 years, $77, 30 years, 122, and tremendous value knowing that God forbid something happens to you, your family is okay. So living benefits, okay, 20 years, 77, 30 years, 122 doesn't affect the living benefits, though. And most people don't realize that, especially single parents, that were like 60% more likely to have a stroke or a heart attack raising our kids on our own than with a spouse or a loved one in the house with us. So real quick, we got 1.74 million. How does that break down in living benefits? What if I become ill? Can I access a portion of my death benefit? Well, in these policies, you have access to everything in your death benefit. Terminal illness, you're going to get, let's see, I have a chart up here also. Let's see if I grab hold. You're going to get 1.7, I'm sorry, you're going to get $1.5 million out of your 174. So, I'm going to show you this chart. It's a comparison chart between all the companies that are out there that offer living benefits, not all, but most. And if you can see here that, let me do this. Noticed it yet, but I really don't want to mention the names of the company I'm dealing with here. I mean, I tell you on the phone and stuff, but I don't know how they feel about me putting this up. So just in case, if we were to just look at this really quick, the life expectancy, some companies say if you're terminally diagnosed, you have to be dying within 12 months to get that death benefit advanced to you. This company, we're looking at 24 months. So the first inkling we have that we might possibly have something considered terminal, we got 24 months span. If the doctor doesn't say you're going to be dead in 12 months, then you get nothing, or you have to wait a year to get something. But some of these other companies like Lincoln, and most of them, you can see 12 months. So that's a negative to me, big negative to me. One company here, American National, pretty decent company, does the 24. There's a few of them out there that does 20. This is AIG now, called CoverBridge. And I represent all these companies, but I choose based off of my clients which program for which need uh, is best, and they'll give you up to 1.5 million, 100% of the death benefit, or up to $1.5 million. And they have a chronic illness, a critical illness, a critical injury, and an Alzheimer's living benefits package, which is unheard of in this industry. But if we compare to like the other best one, which is going to be American National, again, 24 months, they will go up to 2 million for ages 0 to 64, which is really nice. But they are going to skimp in other places. So we have what we call triggers, right? And if we look here, number of triggers, here's a trigger. So for chronic, if you have a chronic illness, you're automatically covered in this. Whereas even the best one here, yeah, they have chronic also. In critical illness, we have 13 triggers. Yeah, they have 16, which is truly amazing. The problem is they don't have critical injury, not available. They don't have Alzheimer's. So you losing some things to get just a little bit more. And I don't really think that is a benefit personally. Mass Mutual, which a lot of people go with, sucks. New York Life sucks. Not available, not available, not available. Everybody's got Mass Mutual. Why? I don't know. Aggressive salespeople, maybe. But great product right here, and the best when it comes to all of it. You got chronic. You don't have to be like a permanent chronic. It just needs to be chronic. When it comes to the benefit type, it's a tax-free cash, check that comes to you. 13 triggers for chronic illness. They have 4 triggers for chronic critical injury, and then they also have Alzheimer's, which nobody has. So let's just keep moving on because I know my videos go long. So terminal illness, 1.5 million. Chronic illness would be $12,178 per month. The critical illness benefit would be up to $1 million. So you have a 1.74 policy. They're going to give you $1 million. If it's a critical illness, a critical injury, 1 million. And God forbid you got Alzheimer's, which is happening to so many people now. Like my dad started when he was like 65. This policy would have kicked in and given him $1 million cash for us to make it comfortable. Big deal to me. So Alzheimer's, just here's the riders. The rider allows for the payment of a portion of an insurance death benefit on a discounted basis if the insured has a quality diagnosis of Alzheimer's disease or Lewy body dementia. So the rider will not be available if the client has a first degree relative, mother, father, or sibling with a history of Alzheimer's disease. Kind of sucks, but it is what it is. There's no additional charge for this rider. It comes free. Terminal illness allows for the payment of a death benefit at discounted basis if the insured has an illness or chronic condition that will be reasonably expected for you to die within 24 months or less. No waiting period to be eligible for this payment, and which will be made to you in a lump sum. There's no annual limit in a lifetime of benefits, so you can receive all your accidental or receive all your ABRS, which is the benefit riders, and there is no additional charge for that rider. And we'd be looking terminal, that's 1.5. Critical illness is pretty amazing. We have a critical illness rider of $1 million here for this particular policy, ALS. I know somebody actually just developed it out of nowhere, and he's losing his mobility, which sucks. Aortic graft surgery, and aplastic anemia, blindness, cancer, cystic fibrosis, end-stage renal failure, a heart attack, heart valve replacement. My dad had heart valve replacement. That could have been good for him. and a major organ transplant, neuron disease, a stroke, sudden cardiac arrest. I got a buddy. He actually is online all over the place. He's got videos with this particular company about receiving a huge settlement with them from, not settlement, but benefit rider, because he had a aortic, he had a critical, no, sorry. Where did it go? My brain just gone. He didn't necessarily have a heart attack, but he had a cardiac arrest, and this company covered him. Where his other company, which I don't remember who he had, it was, oh yeah, that's one of the others. I'm not sure. I can see it up here. Remember, no, a surety has a living benefits on there, and they told him, sorry, we're going to send you a get well card, but not a check. So he called this company we had another policy with, and they gave him, I think it was like 250 grand out of his policy, and that was because he had a critical illness. So I think maybe he had 500,000, and that's what they gave him. Let's take a look at the next one. So chronic illness, or critical injury. Let's look at that critical injury, $1 million. So if you end up in a car accident, end up in a coma, you get into a car accident and you can't walk, you have some kind of paralysis, fire, house burns down, or explosion in the car, God knows, severe burns, pretty hard to deal with. Well, you're going to be getting on this particular policy, critical injury, $1 million. And God knows, if you fall off a ladder, you can have traumatic brain injury under critical injury right here, $1 million. You got to make your claim within 365 of the days of the qualifying event. So chronic illness. Now, if you can't do, where does it say it right here? If you unable to perform 2 of your 6 daily activities, have ADLS, or become cognitively impaired, which happens to my wife, 7 minutes with no oxygen, or until the paddles came out and revived her, you will be eligible to receive payment for the death benefit on a continued basis after the rider has been enforced for 30 days. So let's see here, you had 1.74 critical illness or chronic illness, holding $12,000 a month. Shit, I was making like $3,500 a month then. What a difference it would have made for her. So yeah, that's pretty much that. So to go back just to what is our rate for the 1.74 million, we're looking at 20 years, $77, people. Come on. I mean, get yourself covered if you don't have anything. Like, seriously, I mean, $74, that's not even $1 a day. I mean, I'm sorry, $74 is $2 a day is 60. And I mean, so you're looking at $2.50 a day to protect your family for 20 years. Come on, man. I mean, I just had a guy tell me yesterday, I don't want to say his name, but really, really nice guy. What a great dad, like 3 kids, Louisiana, worked for one of the major convenience distribution, whatever department stores, doing like refrigeration repair in there. I mean, great guy, hard worker. He had a couple 100,000 from that he got a cheap policy because it gave him a discount on his homeowners, and he had another couple 100,000 from work, I think maybe 2. So he had like probably 500,000 now. He took $1 million policy. I was really surprised. I told him, you got that now. Put another 1.5 million, 1.2, get yourself up to that 1.7 to 1 point. He was only making 80 grand. But $2 million is for 80 grand. And that was without overtime. So his human economic life value was like 2.2 million. And that's where he should be at. Wife was, I forget, a teacher or not, but I mean, for her, it was even cheaper than it was for him. It was like 77 for 20 years, and they took nothing on her. Like, watch my other video, the value of a mom. I mean, geez, what I would do for a mom for my kids, I would worship her and, insure the crap out of her because I could never lose somebody else again, knowing what I know of how much women work on their family, how much effort they have to put in. I mean, you're talking about a nurse, you're talking about a therapist, you're talking about a financial planner or, somebody who's helping with the bills, cleaning the house. You got a maid, you got a taxi driver, they should be making 280,000. Mom's making like 60,000 a year and has like under a half a million, $250,000 worth of coverage on her. Kidding me? I'm whatever, but that's just my personal opinion. And insure your wife for double what you make, quadruple what they make. Telling you, people, telling you, there's, I'm just saying, man, do it. So, um, yeah, I'm going to make another video for people after this that is just about what if you can't afford life insurance right now, but you need it. What do you do? So come back for that one. I'm sorry, my videos go so long. I'm such a yapper. Well, I appreciate you being here. And I appreciate you watching. Give me a call, 561-542-8610. It'll be in the description. Watch the video, like the video, subscribe. I mean, I don't get anything. God knows this page ain't monetary yet, but or ever gonna be. I just want to help people. I really do. I mean, nobody wants to be in the situation where I was in. And God is good. So, go to church, go to your temples, do what you do. But just remember that He is the one, and you can't do anything without Him in life. And if you are, that will come to a crashing end eventually. But watch your kids, take care of your kids. Don't forget, they are what comes first, and making sure their futures are better than ours. Again, make their lives better if you're not there than it would be if you were there, so that they can have more than they would have expected. Because if you ain't there to do it, I always say, if you ain't there to talk to them about girls and teach them about other things, and give them their first pocket knife and take them fishing and teach them that stuff, and mom has to go out and take them to fishing camp, and it's $500 a kid per week for 2 months. You're looking at $4,000, and they can go. Nobody wants to take a little girl out of ballet because dad died. So yeah, that's it. I wish you the best of luck. I hope these videos help. I hope my passion comes through here. I don't know if a lot of you know that I was in the furniture business before, and we had to burn through our retirement savings that we had through 401ks and IRAs. And that's another passion of mine, which I'm going to make some videos about, is how do normal people save for retirement, and how could they be saving for retirement? Life insurance is one of the few things you can use, permanent products, to get tax-free income in retirement just by insuring your family now. And I want to make a lot of videos about that. IULs, Index Universal Life, whole life products. There's ways to do it so that you can take advantage if you're maxing out your contributions to an IRA. And what else are you going to do if you own a small business like I did, a furniture store? Life insurance, man. Boom. That's the way to go. Telling you, some estate planning. Another thing, you don't have a trust. We're getting into trust now. We have a friend named Dina. We're going to make a video with her talking about how to protect your family against, God forbid, the worst case scenarios, making sure that your kids can be beneficiary through the trust, because nobody knows. You can't put your kids as a beneficiary. How are you guaranteeing they get that money? Well, set up a will, set up a trust, and set up a directive on how you want that money distributed. So lots of different things to talk about in the future. God bless you all. And sorry about my video being stupid long. What happens when you're from New York. You learn to talk. God bless you.